This is my second year performance review. Please refer to my first video for an introduction to give you more information about myself as a prop trader. There's a link to the video popping up on the screen right now. I strongly recommend that you watch the first video, otherwise much of this video would not make sense. In this video, I will first talk about the performance metrics of my trading. Then later on I will go deeper into comparisons between this year and last year. As you will find out, there are major differences. The complete audit report is available for everyone to see on my private blog. The link is in the description of this video. Just like last year, my trading history has been audited by an independent third party and all of my statistics have been checked thoroughly. First of all, my trading capital was increased by 66% and my risk per trade was also doubled compared to first year. These were the rules given to me. I didn't have a choice in it. There was no changes to my trading at all. I used the exact same trading plan as I did in first year. So, how did I go? Well, this year finished negative. I took 18 trades in total, only had 1 winner and 17 losses. The longest losing streak was 11 trades in a row. Expectancy for the year is negative, which means that I lost money overall for this year. My average win-to-loss ratio is high at 3.83. Even though the losses were small, there were just too many of them in comparison to the 1 winner. I finished the year with minus 2.31%. This page shows what my results would have been if I was trading with different percentage risk per trade. This is the actual result, and over here are the numbers based on some hypothetical scenario. The purpose of this page is to allow direct comparisons by standardizing the results. If I was trading this year with the same percentage risk as last year, then I would have finished at minus 1.24%. On the other hand, a 1% standard position size would have given me minus 4.35%. The biggest question that I ask myself is, what happened? I wanted to know why I performed poorly during the second year, and whether or not it is time to review my trading plan. Firstly, the increase in trading capital and percentage risk per trade made a significant impact on this year's result. The firm allocated 66% more capital and they also doubled my trading size. This meant that a full loss during this year is actually 3.3 times larger than a full loss in the first year. Here's an example to illustrate my point. This example also highlights the fact that a loss this year is actually bigger than a win from last year, both in percentages and in dollar values. I didn't agree with the firm's decision to increase my trading size by this much, but it wasn't up to me. They do what they think would achieve the best return on their money. As a new trader, I wasn't in a position to make demands. If I had a say in this matter, I would have increased my trading size by 10 to 20% at most. Such a big jump in trading size would amplify the result of the second year, meaning that a positive result will be huge returns and a negative result will eat into first year's profits a lot more than it should. In fact, if I was trading this year with the same percentage risk and no extra capital, then it would have been a minus 1.24% loss. Still a loss, but much more manageable considering that first year was up plus 3.79%. Looking at the bigger picture, I wanted to know if my trading style is long-term profitable over the 2 years if there was no changes to percentage risk per trade. The performance scaling page on both of the audited reports will show me that. Let's have a look. Suppose I traded the account with 1% risk for the past 2 years and didn't make any extra deposit. First year would have gained just over 15%, and second year would be a loss of about 4.5%. So overall, I would still be up about 10%. In fact, I combined the 2 years results together and worked out that it would have been positive 9.71% over the 2 years. But something else has changed beside my position sizing. I noticed that market conditions have changed since Brexit. This is most evident in the number of trading opportunities. I had 44 trades in the first year, but only 18 for this year. That's a 61% drop in trade setups. I also noticed that this year, price action have not been reacting to my support and resistance area as it did in first year. There were 3 trades that were deep in profits but turned around completely. Price was 75% or more to my target, but then it turned around. The turnaround also happened very quickly, too fast for my trade management rules to lock in any profit. This is a big change from first year, when not many trades would get this close to target and reverse. If these 3 trades were winners, then I would have finished with a small positive gain for the year. In my limited trading experience over the past 4 years, this is the first time that I noticed such a big change in statistics from one year to another. The first year looked great, but the second year looks like I shouldn't be trading. I don't know if this kind of fluctuation in statistics is normal or not, but it is a concern. Going forward, I am no longer prop trading for the firm. After this year's performance review, they have decided to let me go. So my journey as a prop trader will take a pause here. For now, I will focus more into my day trading where I can control my position sizing the way I see fit. So there you have it. The reality of prop trading is that it's not all rainbows and sunshine. Well, at least not for me anyway. I have learned so much in the past 2 years as a prop trader, and I will take the lessons with me into the future. I am probably the first trader ever to publicly announce that I've been let go as a prop trader. I'm proud because I did everything to the best of my ability. This is definitely a setback, but I am determined to keep on improving myself. This has been my performance review. Thank you for watching, and I wish that you too can overcome setbacks to become a better trader.